what is the fourth quarter outlook dictated by? What are you seeing in your end markets?
Yeah, all of it is it's a demand environment. If you think about it, we've always known the softness in industrial. We've outlined that in the prior quarters. We added to that, the softness that we're seeing, or pockets of softness that we are seeing from customers as they digest through the inventory. And the inventory is really related to the end demand softening in automotive. So you couple these two with demand being impacted by interest rates, and you give the guide that we've outlined, which is a softer guide than we've seen, with a single outlier of a customer, which is also demand that is the biggest impact, which is an automotive OEM in North America.
Hassane, is there a tangible impact from what we've seen in the strikes here in North America?
You're referring to the UAW strikes. We don't see a direct impact. It's not really baked in. There's no tangible impact that we can pinpoint to. But again, the impact is not going to happen in a quarter. If there's impact, it will be in the outer quarter. But given the macro uncertainty that we've had, that's not going to be really an outlier that we have to consider.
Hassane, you've therefore outlined that there's one key player in particular that's impacted your numbers. Can you say who?
No, I'd rather not get into customer specifics.
When we do get specifics, can I ask specifically about your relationship with some of the Chinese manufacturers? Because you do have relationships there, and geopolitics has been tough in that arena, to say the very least. How do you see your ongoing relationship with China more broadly?
I think our relationship with Chinese OEM, specifically on the EV side, is very positive. In my prepared remarks this morning, I talked about the fact we are engaged with long-term agreements with 4 of the top 5 China OEMs that are the leading EV OEMs. We've also renewed our engagement with NIO that extends towards the end of the decade to 2031 with their new generation. So the relationship is very positive. It is incremental for us. So I know there's a lot of backdrop about demand in China, but demand is going up in China. Demand is going up in EVs worldwide. I know there's a lot of stories about softening demand, but that doesn't mean demand is going down. Demand's actually increasing. It's also increasing in the fourth quarter for us and through 2024. And that also relates to some of the China business that we have, which has been positive because we're a share gainer over there. We came from a very small revenue penetration, and that's going to be increasing. So any additional EVs in China is actually incremental revenue for us.
Hassane, I always think about the ON Semi story, or the mainstay of it being silicon carbide going into either battery or power management kit in autos or industrial. And, you've painted this kind of broad weakness. But within the universe you serve, where's the strength? Are there specific industries who are just gobbling up silicon carbide chips as fast as they can right now?
Yeah, so I would start with the biggest industry taking silicon carbide chips is the automotive industry, or the e-mobility, EV specifically. Tangential to that, which is driven by it, and also a consequence of it, is energy infrastructure, whether it's the charging stations or, more importantly, the energy storage systems to complement the grid. That's actually been a very positive and very strong demand environment for us in the industrial. Although industrial in general has been weak, specifically the energy infrastructure has been a very positive and very strong, going over 50% growth for us, and will continue to do so for the remainder of 23 into 2024. So those two big macro or mega trends that have been fueling the silicon carbide adoption are still here and still driving adoption.
And you've been trying to paint a picture of your supply chain as well, being able to feed that sort of demand, and talking about South Korea as well, the ramp there. We're looking at some charts as you speak, Hassane, and they're pretty brutal, to be perfectly honest. We're off by 20% on the day. It's a complete leg down over the last couple of days. How do you respond to those sorts of selling pressures from an investor base? How do you manage your own talent pool at this time?
I look at the reaction as I would say, a momentary short-term reaction. It is not a reaction that reflects our long-term view of the business. We'll get through it. I think it's a buying opportunity for a lot of the long shareholders that we have. Employees see it the same way. From us internally, our employees are pumped up. They've been over executing and really delivering beyond our goals. Specifically, for example, we talked about silicon carbide. We've been very bullish about the outlook or multi-year outlook of electric vehicles. We maintain that strategic view and that positive view. Our employees see it. The talent that we are recruiting see the leadership being built, and that's what we're really basing our energy on. Whatever happens today is again, it's a temporary, whether it's a day, a week, a quarter, it doesn't really matter. We don't manage the company on a quarter to quarter or week on week. We manage it really on a long term, and that's where our investments have been going.